Gentlewoman is recognized.
I rise today in strong opposition to H.R. 3383, the INVEST Act, which is an end-of-year holiday gift to Wall Street paid for by the hard-earned savings of teachers, nurses, seniors, and other hardworking Americans. While several of the provisions in the INVEST Act could support capital formation, the bill contains 3 poison pill provisions that make voting for the overall bill untenable. These provisions will raise costs and increase fees for people all across America. At a time when the president's disastrous tariff policies are causing many Americans to struggle just to pay the bills, the INVEST Act would reduce federal investor protections, jeopardizing the retirement savings of millions of regular hardworking Americans. But it didn't have to be this way. I worked closely with Capital Markets Subcommittee Chairwoman, Ms. Wagner, and full committee chairman, Mr. Hill, just to get to yes on this bill. And 19 of the provisions in this bill would pass overwhelmingly through this House. Unfortunately, Republicans could not resist the demands of their Wall Street, and they threw in 3 poison pills at the last minute that would make Wall Street richer and retirement more unaffordable. Let me tell you about these poison pill provisions and what they will do. The first section, 202, would remove the 403B retirement plans relied on by millions of teachers, nurses, and nonprofit workers from the protections and oversight of the federal securities laws. This massive $1 trillion deregulation of 403B plans would allow Wall Street middlemen and unlicensed so-called retirement consultants to free themselves of SEC's rules to always keep the plan holders' best interest in mind. It is not surprising that while those Wall Street middlemen are heavily lobbying this bill, the groups and unions representing the teachers, nurses, and other workers who would be affected strongly oppose. The National Education Association, representing over 3 million educators all across the country. The American Federation of Teachers, representing over 1.5 million teachers and healthcare professionals. National Nurses United, representing over 200,000 registered nurses, and the American Federation of State, County, and Municipal Employees, representing 1.3 million public service workers, all oppose this bill. And so, that's not all. Let's look at the second poison pill, Section 205. This provision would make electronic delivery of financial documents the default for all investors, including seniors, even though the majority of seniors prefer and rely on paper delivery. The bill would automatically switch investors from their preferred paper delivery to electronic delivery, even if the investor has recently declined to receive statements. Millions of seniors still don't have access to reliable internet or an email account. And as a result of this provision, they would now be in the dark about their finances and investments. This means they would be much more likely to notice junk fees and unnecessary trades executed by their financial professional. Not surprisingly, the AARP, representing 110 million Americans, strongly opposed this provision when it was considered in the committee this Congress. Finally, the third poison pill. Section 206 allows Wall Street to vastly increase the amount of risky, opaque private assets they sell to Main Street investors. It does so by allowing what is known as closed-end funds, which are similar to mutual funds and used by many everyday investors to invest up to 100% of their assets in shares of private equity and venture capital funds and directly into the unregistered shares of private companies. Current law limits this kind of private assets to only 15% of a fund's total assets. This is because private assets are very different from the publicly traded stocks and bonds that most folks are used to investing in. Unlike publicly traded stocks, private assets are not registered with the SEC, meaning Wall Street's cop on the block and all the ensuing protections that come from its oversight are not in place. They're also harder to value, contain far fewer disclosures around risk, and are very hard for investors to get their money back due to withdrawal limits and long lockup periods. For these reasons, our securities laws have guardrails on Wall Street so that they don't peddle junky assets to investors who can't understand the financial risk. These various provisions and the bill as a whole are opposed by the groups who are fighting on behalf of everyday Americans, including, again, the AFL-CIO, American Federation of Teachers, Americans for Financial Reform, Public Citizen, the Service Employees International Union, Communication Workers of America, American Federation of State, County, and Municipal Employees, National Education Association, National Nurses United, and the United Auto Workers. The state securities regulators also came out against the bill just this morning. No one cares more about capital formation than our state governments, but they also care that deregulation does not lead to investors and small business harm. Let me just say, Mr. Speaker and members, we support capital formation. We tried so hard to get an agreement, and we thought we had one because of the provisions that we could be bipartisan on, because we too support capital formation. What we don't support is these poison pills who just do the kind of deregulation that would put so many hardworking people at risk. As I mentioned, the teachers and the nurses and all of the other labor unions, et cetera, are really, really worried that these poison pills will do so much harm that we had to plead but walk away from what we thought we could get as a bipartisan operation because of the poison pills at the last minute. I reserve the balance of my time.
Gentlewoman reserves.